cryptocurrency, the idea of having something where there's no intermediary is very attractive. If you think about what a currency is an intermediary between a government and you. They're issuing a piece of paper with printed zeros on it, and you're using that as a transaction intermediary, if you will. Bitcoin is very similar to gold in that way, right? It's a medium of exchange without a government behind it.
Welcome to Rethinking the Dollar. Today I'm excited to have my guest, Mr. Tim McCutcheon. He's the president of Wealth Minerals LTD, a minerals resource company focused on the development of new energy technologies. Today he's joining us to share his thoughts on the global economy, as well as a lot of opportunities in the renewable energy sector. So Tim McCutcheon, welcome to Rethinking the Dollar.
Thank you. Thanks for having me.
Well, Tim, I appreciate the opportunity to sit down with you and talk about what you guys have going on with your company. And so I'm new into the whole mining sector myself, so I'm looking forward to learning a lot from you as well. But here on Rethinking the Dollar, we tend to talk about a lot of global policies and a lot of monetary situations. So before we get started, I typically start off with some Rethinking the Dollar questions. And the first question is, what comes to mind when Tim McCutcheon hears the words Rethinking the Dollar?
The United States, and of course through the United States, the International Monetary Fund, there was this thing for many years called the Washington Consensus. And so what that was a policy of how the IMF and the international community was going to help emerging economies get their financial sort of orders, get their financial situation on an even track, right? And basically it was very simple. Don't have budget deficits. If people start sucking out your hard currency because you have trade deficits and budget deficits, then you raise interest rates so that your local currency is more attractive. And to have a robust taxation system where if you have to raise taxes, you just do it to make sure the budget's balanced. And so, I lived and worked in Russia for many years and been involved in emerging markets my whole life. And people very vividly remember the IMF sort of saying, if you want our money, you have to do these things. And this is the 1990s and the 2000s and everything else. And the irony, of course, is in 2008, when the Lehman Brothers and the financial crisis happened in the United States, the U.S. did the exact opposite of what it's been telling everyone else to do, because the reality is if you follow the Washington Consensus, the economic pain is huge. I mean, you basically wipe out savings, you wipe out everything, and then you start fresh. In the long run, the Washington Consensus is correct, but it's incredibly ironic that the one time the U.S. should have followed its own advice, it didn't. So when you say rethinking the dollar, what I'm thinking is that 2008 was something that the history books is going to put down as sort of the before and after year in the world. Basically, after 2008, the whole world understood that the emperor has no clothes. And so, for the most part, we're sort of waiting for the, as you say, the other shoe to drop. And that's what we're all waiting for. I mean, basically, everyone understands that, we've been propped up to a certain point. Up until 2008, it was sort of taboo to talk about it because things were kind of chugging along just fine. After 2008, people said, whoa. Borrowing $1 trillion a year every single year for a decade is not sustainable. It's just not. And this whole idea, well, other countries do it and other countries don't do that. And sooner or later, this is going to come home. The problem, of course, is that, you can get really poor waiting for the event to happen. There's a lot of money to be made between now and then. You just have to be prepared so that when it does happen, when, there is sort of economic turmoil, that you're not sitting on the fence. You got to be prepared to pull the trigger pretty quick. Right. But between now and then, if you basically wait in your bunker, with your canned food and everything, it's 10 years you've been waiting in your bunker. It's a long time.
Yeah.
Right? So you got to kind of balance it out.
Right. Fair enough. Now, you mentioned about being prepared. So, and part of being prepared is having understanding and having education and having knowledge of what's happening around us. Now, would you say that for your average investor as well as saver or whatnot, that this might be one of the most important times in history where it's worth your best interest to get education on matters such as the financial literacy as well as monetary policy? What are your thoughts on that?
Yeah, I mean, look, the entire Western world is based on consuming, and what debt is, debt basically takes consumption from the future and puts it now. That's what debt does, right? I have to save up money to buy a car, or I finance buying that car and I get it now. So debt is robbing future consumption for today's consumption, and that's fine to a point. Problem is that when you get to a certain debt level, you can no longer borrow, and therefore all of that future consumption has already been consumed, and then you don't have any money to do any more of that. And so what it means about being prepared, it means, think about your debt position, think about, how much, what your investments are, what you're really betting on, and think through a lot of things, because what I see a lot of people do is they'll get certain things right, but then they sort of miss the bigger picture in terms of, I'll give you an example. When Standard & Poor's lowered the investment grade for the U.S. debt from AAA to AA, and people started selling U.S. Treasuries. Well, the irony was that you're selling U.S. Treasuries to get U.S. dollars that you then put right back into a U.S. bank, which is being financed by the U.S. Treasuries that is backing all of the bonds that insure the U.S. bank. So it's kind of like, who are you kidding here?
Yeah.
Right? So the point is that I don't even know what the answer is. My point is don't fool yourself as to what your exposure is. Yeah. Right? Don't be delusional about where you are and what you're doing. I mean, to a certain extent, the way the world's set up right now, it's very hard to escape it. Because, if you got a bunch of gold at home and the world blows up, you're going to be the first guy to get shot because everyone knows you got a bunch of gold in your basement.
Right.
So you have to think about, like, what can I control and what can I not control? And just be comfortable with that now, because I can tell you, I lived in Russia. I was there during the 1998 debt default. I mean, we have no idea what that's like. I mean, it's hard for me to explain to someone who hasn't experienced it when literally the exchange rate changes on an hourly basis.
Yeah, that's
I saw one scene where there was a store selling shoes, and there were people pulling the shoes off the shelves, and there was a woman with one of those price sticker things. Mm-hmm. Trying to put stickers on new prices on the shoes before people could grab it off the shelf and get it to the cash register.
Wow.
Like, that's how fast it happens.
Okay, so let me interject right there. So I wanted to get at the overall health of the economy, and you're hinting at a lot of things that we're going to get into as far as the day of reckoning, where we are confronted with the reality of similar situation what happened in Russia. Now, in your opinion, you mentioned debt and the fact the Federal Reserve is not actually following their own advice from years past. Now, what would you say the overall health of the global economy is right now? Because I know we're $233 trillion worth of global debt as of last year. So, in your opinion, what's the current status or the health check of this global economy?
Look, I mean, the world kind of, the world chugs along, right?
Mm-hmm.
I think one of the problems that people have, and everyone wants that sort of that moment of retribution, that instant of just, it's over, mm-hmm. right? That's not going to happen.
Yeah.
That's part of the problem, is that it's going to be a death by 1,000 cuts, a little bit here, a little bit there, a little bit there. I mean, look. Give you an analogy. So if you're a guy and you're out working and you're making 30 grand a year or whatever. Now, if you're allowed to borrow $1 million, right? And you're spending that $1 million, even though you're earning 30 grand, but you borrowed all this money, of course you're going to have a very amazing lifestyle, right? Up until the point when you can no longer borrow that $1 million. Forget about paying it back. Just you can no longer borrow any more than that, right? That's the U.S. That's the Western world, is that, the difference between how we live, and then you say, this is how we live, this much is what we're paying for as we go, this is how much we're borrowing, future consumption being brought forward. At one point, that difference closes. Yeah. So, but it happens slowly. It's not going to happen overnight. I mean, by the time you have that moment where you're putting prices on the shoes, and like by that time it's the train's left the station. I mean, it's long gone, right? And that's what it's hard to say. I mean, I'll give you another example that someone told me I thought was really interesting. So if you're sitting in a gigantic football stadium, yeah, and you're at the very top row of the football stadium, and it starts filling up with water, right? How many minutes if every time the water doubles into the football stadium, how many minutes do you have to get out before you're flooded? And what he said is, so there's 1% of the football stadium's got a thin coat of water,
Hmm.
the grass field.
Yeah.
1%.
Yeah.
And how many minutes do you have to get out of the football stadium if the water amount doubles every minute? And the answer is something like 14 minutes.
Mm.
Just
Got me
boom,
thinking. Got me
right?
thinking. Yeah. Because I was going to say it also depends on where you're located at, but yet from the time it leaves the grass to the very top of the stadium, you say 14 minutes. That's interesting. So it got me thinking there. Okay, go ahead.
Right? So it's just like zoom,
Yeah.
it just happens. And that's kind of where we are. And people are very ill-equipped to understand exponential movements. We understand sort of 1 + 1 is 2. No. We don't understand 1 + 1 2, 2 4 4 8. The brain's very hard at kind of getting around that.
Yeah.
And so where's the state of the world economy? I mean, look, I go to Africa, I go to Europe all the time, I go to Asia. Things are chugging along. The problem with the West is that, we live better than everyone else. And we've managed to do that by taking future consumption and paying and bringing it forward.
Right.
That's not forever.
Right.
I mean, it's just a fact, right?
Now, speaking of Asia, you hinted at just where we're at now. Now, I want to get your thoughts on this trade war / currency war situation. So we have a lot of back and forth between us and China and whatnot, and a lot of rhetoric from our president here in the United States of America. What's your thoughts on that? How healthy or unhealthy is that for both economies, being that we're heavily dependent upon them and vice versa, consumption-wise? What are your thoughts on that, and where will all this play out in the future, in your thoughts?
Well, I mean, look, again, there's a lot of things that we talk about, but it always tends to be rich, comfortable people who say that, this has to be. I mean, the reality is global trade is great. Like, I'm not going to argue against it. But what I am going to say is if global trade means that all your steel workers go out of business and they don't have a job, well, then you have to figure out what the other end of that trade is. And if you don't know that, you can't say everyone's going to be a computer programmer.
Right.
Right? I mean, that's part of the reason why Trump won, is that the Democratic Party was like, screw them. Oh, all those coal workers in West Virginia, well, they can all become computer programmers. Well, no, they can't, right? So do you let them starve to death? Or what do you got to do? And other countries, I think the problem has been is that we're so focused on this whole idea of neoliberalism, right? Free trade, bring down the barriers, let the market rip. And as long as we keep people educated and informed, they'll be able to get ahead in life. And the fact is that's not true.
Yeah.
It's just patently not true. The alternative to that is subsidizing industries that are losing money and everything else. Yes, I mean, that's not a good situation. But again, if you're a steel worker in Western Pennsylvania, what are you going to do?
Yeah.
Right? I mean, you still got to eat every day. You still got to do stuff every day. And, and I've just seen this everywhere, all over the world, where there's this sort of intellectual blasé attitude. It's like, oh, the market will figure it out. And it's like, well, you don't want to be in the other end of that trade, right?
Yeah.
You don't want to be that guy, because the economist in New York says, oh, the market will figure it out. And you're the poor guy who's sitting there on the, on the GM assembly floor, who's getting replaced by robots. I mean, I make it a point when I go to McDonald's, I never go to that touch tone screen to order, because some poor kid, give the kid a job, for crying out loud.
Right.
If my hamburger costs 5 cents more, like, I'll live with it, right? If the kid has a job, he learns the value of work and getting a salary. And, this whole idea of automation, everything, we got 7 billion people on the planet. When I was born, it was 4. Actually, it was 3 when I was born. What are all these people going to do?
Right.
If everything's replaced by computers and robots, you still got a lot of people. They got to eat. They got to do something.
Right. Now that seems to be the current trend we're on, of just technology and just the developments of so many different of just technology itself. Now I want to transition that into your thoughts with the whole cryptocurrency crave and phase as we're just underway now. And so that plays into just, technology advancing. So where do you see that market? Is it serious? Is it here to last, or is it just a fad? Or I hear a lot of people mention it's threatening the banking sector. Give me your thoughts on that.
Well, I mean, theoretically, with cryptocurrency, with blockchain, really, we're talking about the technology, is that because you can put a discrete tag onto something that is totally incorruptible, you then don't need an intermediary to figure out what's going on. So, for example, I have a pen that I want to sell you. And you say, well, how do I know you actually have the pen? And I say, oh, well, here's my blockchain code. And you can say, yep, you actually own the pen because it's a totally incorruptible system that shows you own the pen. So that when you give me money and I give you the pen, you know that contract's going to get fulfilled, right? Up to now, what we have is we have a bank or some sort of institution in between you and me, and that institution checks you have the money, and that institution checks that I have the pen, and they take a cut. Their business basically is removing risk from both sides of that trade. Blockchain basically removes that because there is no risk. Because by blockchain technology, I can figure out that you definitely have the money, and you can figure out I definitely have the pen. So if you go to cryptocurrency, the idea of having something where there's no intermediary is very attractive. And if you think about what a currency is an intermediary between a government and you. They're issuing a piece of paper with printed zeros on it, and you're using that as a transaction intermediary, if you will. Blockchain Bitcoin is very similar to gold in that way, right? It's a medium of exchange without a government behind it. The only thing I can say is the history of the world has shown that governments don't like it when they don't control currency. So I would be very surprised if governments didn't clamp down on Bitcoin.
All right, I do agree. Now, before we transition into find out more about your company, Wealth Minerals, the name of the show is called Rethinking the Dollar. And so I'd like to ask my guests, their long-term thoughts and projections on where the Federal Reserve note might end up 5-10 years from now, considering the fact we're talking about currencies and medium of exchanges and how a lot of our Eastern nations don't really no longer trust the United States of America in handling the reserve currency status. So in your thoughts, where do you see 5, 10, 15 years from now? Is there an opportunity or a chance that the dollar, Federal Reserve note, might not be the reserve currency in the future?
Oh yeah, no, I think that's very clear. I think it's very clear. I mean, look, the United States economy at the end of World War II was something like 50% of world GDP. Now it's on the order of 15%, right? The reason why the dollar is everywhere is in part because at some point, let me ask you a question. If you were going to sell me your car and I said, well, I don't have dollars, but I have Kyrgyz Som, will you take some Kyrgyz Som?
No.
I said, no. I said, oh, I'm going to give you some, ringgit from Malaysia. Here, I got a bunch of ringgit. I don't have dollars, but I got ringgit. I'll give you a ringgit. No. Maybe if you're going to go on vacation in Malaysia, you might say, oh, yeah, I'll take it. But otherwise, you don't want it.
Right.
The reason why everyone takes a dollar is, one, the United States was such a huge part and still is a huge part of the world economy. But the other thing is that due to the petrodollar, where Nixon and the Saudi royal family came to an agreement in the 1970s, the Saudi government basically said, we will only sell our oil in dollars. And the Saudi Arabia being one of the biggest producers of oil in the world, what that meant is anyone who has dollars anywhere at some point along that chain can use it to get a commodity oil, which is absolutely necessary for day-to-day existence, right? So by doing that, the Saudi Arabian sort of deal with Nixon and the US has created this huge demand for dollars that is outside of the US. Right? Because you're not going to take Malaysian ringgit for me to buy your car, right? But if you're a Malaysian and we're both in Malaysia and you're going to sell my car and I say, I don't have ringgit, I have US dollars, you'll take the US dollars. The reason is somewhere along that chain, someone's going to get the dollars and buy oil from Saudi Arabia or Kuwait or United Arab Emirates or Qatar or anywhere else. They can actually use it, right? Or they can use goods and services in the US. So that is going to come to an end as the U.S. becomes a smaller part of a bigger pie. And the key thing right now, for example, is China, right? It's such a huge economy that people say, you know what? I'll take Chinese yuan because I can buy goods and services in China with yuan, just like I can buy goods and services with dollars in the U.S., right? So now the oil producers are accepting yuan. Because you have a stupid situation. It used to be that Russia would sell China oil, and China would pay for the Russian oil with dollars. And then Russia would take those dollars, sell them, buy yuan, and then buy consumer goods in China. And at one point they said, this is stupid as hell. Why don't I just sell you my oil in yuan? Yeah. And then I have the currency, and I can buy consumer goods and everything else with it without going through the US dollar. And so yes, the answer is the US dollar as reserve currency it's always going to be there because the US is a major economic power, but the dominance that it has right now is going to go away.
Right. Fair enough. Now, I appreciate you sharing your thoughts on the dollar. And so that's one thing that I like to get different people's perspective on where they see the dollar Federal Reserve note being in the future. So let's transition a bit to Wealth Minerals LTD. So you're the president. You're currently located there in Canada, Vancouver, Canada right now. Share with us a little bit about what exactly Wealth Minerals Company, what you guys do, what you guys are, and give us some details of the management team and whatnot, what's going on there.
Okay, well, Wealth Minerals, look, the world is changing very, very fast, and a lot of the things that we take for granted are changing quickly. And the thing about it, I call them a paradigm shift. The thing about paradigm shifts is when they happen, it's sort of over before you even knew what was going on. I mean, think about we grew up, there were no such thing as a cell phone, right? Now everyone's got two of them. So, it just happens overnight. Electric cars are becoming more and more prevalent because it's kind of silly to basically take squished dinosaurs and stick it in, millions of cars around the world and then burn them. It's kind of dumb. Think about it. Right? If we can have a centralized power plant, get economies of scale, create energy at the centralized power plant, and then distribute that energy and store it in a way where it's used and consumed when people want it, that's the power of a lithium-ion battery, right? So the key part of that is lithium. Wealth Minerals has one of the largest portfolios of lithium assets in the world, and it's in Chile, which is one of the safest jurisdictions in the world for mining. And so what we're doing is developing our assets to be a supplier of lithium to the world market. I mean, we look at the demand for lithium is going through the roof because everyone wants to have an electric car, right? Everyone wants to have electric, they're talking about now electric-powered boats, electric-powered airplanes, electric-powered trains, right? They're all going to need this battery technology. But you need lithium. And that's the thing I always find funny about, the people who are very sort of intellectual and kind of, the green-oriented people and everything else. You still got to dig a hole in the ground, right? I mean, the computer still has metal and silicon and plastic, which is oil, in it. Like, it doesn't, it's like vegetarians who wear leather shoes, right? At a certain point, you guys say, well, the leather comes from somewhere.
Right.
So, the thing about the lithium space, though, is that we can be a crucial part in this transition away from individual, gas-powered engines to lithium-ion batteries, and then using major power plants as a much more efficient way of generating and using energy and electricity. So that's what Wealth Minerals is. We have this very large portfolio in Chile. We're listed in the Canadian Stock Exchange. Company right now is about a $150 million company, we have some of the best guys in the industry involved. We've got a guy named Marcelo Awad, who used to run one of the largest copper mining companies in the world, and he's been at the top of the Chilean mining industry now for 40 years, so super, super top guy. Hank Van Alphen is our CEO. He's basically created billions of dollars in value with various mining companies where he identified an opportunity, got in early, and then just blew it out in terms of getting that company to be really big and world class in terms of size and scale. And we're doing the same thing again with the lithium space. The demand right now, the world produces about 30,000 tons of lithium carbonate a year. The demand for that's supposed to be on the order of 1 million tons in the next 7-8 years. So a 5-fold increase in demand, and people are still trying to figure out where it's going to come from. So it's a pretty exciting opportunity for us.
Right. Now, for someone who doesn't know much about lithium, I'm new to this, mineral. So is there different grades or types, or give me some of the layouts of what lithium exactly? I know it's in batteries, but I don't know anything beyond that.
So it's used in batteries. That's the main sort of push forward. You get lithium two ways. It either comes in a mineral from a rock, and you mine it up like you would mine anything else, or it actually comes from salts that are dissolved in dry salt lake beds. You remember the James Bond movie Quantum Solace, and is that really deserty, dry, really good looking, his sidekick there and everything else. And they're in the dry desert here, and at the very end they show one of the villain gets let out into the desert.
Right.
And dies.
Yeah.
Point is that area is called the Atacama, and it's the driest place on the planet. It's in Chile. Mm-hmm. But what's ironic about it is it's all this salt crust that you have, but underneath that salt crust is this entire lithium-based salts that are basically sitting in water that's coming up from aquifers below. So there's actually a lot of water there, but it's all below surface. And so either you mine it like a rock, or you basically put a big straw into these dried salt lake beds, and you suck out the salty water, and then you separate the lithium salt from the water, and that's how you get the lithium.
Interesting.
So our company is that way, and that's the cheapest way to get lithium. There's nothing that's cheaper than that.
Now you say Atacama, so that's one of the I really on one of your website, and so I saw you guys have 4 major projects. So
Right.
is that Atacama? Is that pronouncing that right?
Atacama is the biggest one.
Biggest one.
Atacama is the biggest one. It's the most famous, if you will, in terms of that. And that area supplies 34% of global production. We're in the north. The 34% global production is right next to us in the south, but it's one big geological unit. Then we have about 100 kilometers to the east of that, another project very similar called Trinity, and we're going to be working on that really soon. And then about 250 kilometers to the south is another project called Laguna Verde, similar sort of situation. In general, it's the same idea. You have 2 types of mining, one of which is just digging up rock, and then you separate the mineral from the rock, and then you sell the mineral, whether it be gold or silver or lithium. And that's what mostly happens in Canada, in Australia, where they're digging up rock. Okay. In Chile and in Argentina, there's this really weird situation where you have these old lakes that have dried out. And when they dried out, they left behind all of these salts. And all the salts have lithium in them.
Right.
There's nothing else like it in the world. It's only in that part of the world, really. And the way you get it out is you take a big straw and you punch it down into the salt bed. You suck out the brine, and then you basically let the brine dry out under the sun. All the water evaporates off, and it leaves behind the salts.
Interesting. Now, so I imagine that Chile/Argentina area, and speaking of which, how far the Atacama? How far is that from Santiago?
Well, it's probably about 500-600 kilometers from Santiago, but that's not really where we need to go. There's a port called Antofagasta.
Mm-hmm.
It's one of the biggest ports in South America, and that's 200 kilometers away to the west.
Okay.
So from infrastructure, it's perfectly fine. I mean, there are roads, there's a high tension power line. I mean, there's everything that you could possibly want to get work done there. I mean, it's not like in like the far Sahara Desert where like there's nothing. I mean, there's plenty of roads and infrastructure here. Chile's a pretty rich country. I mean, it's pretty well developed.
Yeah.
And it's in the northern part of the country. And the key thing is that it's just so dry that when you pump up this salty water and you dump it out, the water evaporates off. Just like, if you're on the beach with your kids and they put the seawater in their bucket, and if you leave it in the sun, it'll dry, but there'll be salt all inside the bucket. Same thing.
Now, is there enough lithium, from that region or just globally? Because you mentioned that area is the most richest in the world. So is there enough lithium being produced and being mined right now to meet demands? Because I know that the whole Tesla and all those electric batteries is real in demand now. So is there enough lithium to actually meet the demand and meet the needs of projects and whatnot?
Right. It's a great question. The answer is yes, but in the long term, there's plenty of lithium in the world in the long term. The problem is that the people who buy lithium are these big companies, and they don't really understand that just because they want it doesn't mean it's going to be available when they need it, right? Building a mine takes a lot of time. And the demand is so huge relative to supply that there are going to be a lot of mines that need to be built. And so in the short to medium term, so in the 3 to 5 year window, there's going to be serious issues in terms of supply. And that's where my company, that's where we're so excited, is that all of these guys are, all these gigafactories and new, all these companies want to make lithium powered cars. And they're spending billions of dollars setting all that up. And yet they're realizing, oh, we need lithium, and we don't really know where it's coming from. In fact, it was interesting, just a couple of months ago, Toyota bought into a lithium producer because they're concerned that we're going to, we have all of this capacity that we're building to make lithium-powered cars, and we're so worried about lithium supply that we're just going to go out and buy a lithium producer. Like, that's how desperate the situation is. And so for us, it's extremely exciting because, we're right in the crosshairs of everyone that wants lithium supply.
Right. Now, have you guys broken ground, or where are you guys currently at with that Atacama? How far along, or are you guys? Give me some details on that.
Yeah. So we just put together a deal with the state mining company in Chile. So it's a state mining company. We have a deal with them. We're working together. It looks like if everything goes according to plan, we should be able to produce our first lithium in about 3 years or so. Okay, which is right at that point where the supply-demand gap is going to be the biggest. So, and again, this is sort of by luck, but it turns out that that's the situation. So about 3 years from now, so we've done all of this, what's called geophysical work, where you do a lot of work to figure out sort of what's going on geologically, and then you start putting in your wells to test the brines, both in how fast they come out and what the content of lithium is in the brine, in the salt water. And then once you get that all nailed down, then you got to build a plant that basically pumps up that water and then dries it out under the sun. So about 3 years, if everything goes according to plan, that's right about the time when the lithium supply is going to be the most serious issue.
Right, fair enough. Now, speaking of lithium, so in the whole renewable energy sector, oil prices is now spiking, and so most people, most cars still utilize oil. Now, from a competition standpoint, I'd imagine it's going to be very beneficial for your guys' project in the days ahead because oil prices is rising. Give me a little bit of thoughts on how that will play out as far as more people shifting towards lithium and in need of it as, I guess, oil, prices skyrocket and people use it less or whatnot. Yeah. Share me with your thoughts on that.
Yeah, I mean, look, at the end of the day, Elon Musk is sort of a controversial character, but he had a good point. He was like, look, lithium-ion battery cars don't need to be good lithium-ion battery cars. They need to be good cars. Like, at the end of the day, they're competing with everything else. And so as the sector becomes more and more prevalent, as it starts ramping up, in terms of more, you go on the street, there are more and more, Nissan Leafs, there are more and more Teslas, there's more and more of these cars out there. And as these guys ramp up their production, they get economies of scale. And so the cost of producing those cars comes down. And it means that, for the consumer, you and I, we buy a car like this, we're only going to buy it if it's cheaper or at least comparable to using gas, right? You're not going to be like, oh, I really want to buy an electric car, but it costs me a lot more to run than a gas-powered car. You're probably not going to do that. You are going to do it, say, yeah, it's the same thing, and this is really cool looking, and I don't have to pump it up with gas. I can plug it in at home, right? Then you'll do it. And so we're getting really, really close to that, where the economics of owning an electric car are very close to the economics of owning a gas-powered car. And as the gas price goes up, it's going to make it easier to mentally make that shift, right? I mean, you remember what happened, right? Everyone wanted to buy an SUV. An SUV, there was right in 2003, 2004 or 5. It's like, oh, I want an SUV. And then all of a sudden, the oil price went to $100. And people said, holy crap, that Hummer cost me a lot of money to keep fueled up. And then everyone went to smaller cars, right? So as electric cars, they produce more and more of them. They get economies of scale, so they get cheaper. So that you and I, as the people who buy cars, we say, yeah, I'll buy that because it's the same economics as buying a gas-powered car, and that's when it's going to shift, and that's the real catalyst point. So the higher oil price in and of itself, it's kind of there, but it's when it makes the relative cost between the two alternatives the same, that's when you're going to see more and more the real change.
Interesting. So, Tim McCutcheon, as we draw towards the end of our conversation, definitely learned a lot about Wealth Minerals. So share with us, what's your ticker, where you guys listed at, where you guys traded at again. Give us some information that, from an investor standpoint, I myself am looking to get into, as I mentioned earlier, into the mining sector. So give the layperson some information that could be valuable in assessing and looking at your guys' company and projects.
Okay. So we trade over the counter in the U.S., ticker WMLFF, I think it is. But Wealth Minerals, we trade in Canada under WML on the Toronto Stock Exchange, the Venture Board. Company's about $150 million market cap, so it's small, but it's not super small. But the trading is pretty liquid. I mean, we trade anywhere from $300,000 to $500,000 a day, so you can get in and out of a position if you want to get involved. And the key thing for us is we have a partnership with the state mining company of Chile. I mean, we are partnered with the government. So in terms of all of the permitting and all the regulatory stuff and everything else, we have the best partner you can possibly have. It's the government. So that makes things a lot easier. And the assets that we have, in particular the Atacama is the richest, lowest cost source of lithium in the world today, and it has been for years. So, if you're going to be, it's like, let me put it this way. It's very similar to, if you were going to go out and get an oil asset, getting Saudi Arabia oil assets in 1920, you'd probably do pretty well, right? We're right at the beginning of lithium being a major force for years to come, and having a piece of land in the richest, lowest cost area in the world, that's where you want to be. I mean, at the end of the day, that's where you want to be. And WML is the ticker. Wealthminerals.com is our website, so you can check out our presentation. And we don't live in an ivory tower here, right? So if you or your viewers, you want to learn a little more, feel free to write. There's the contact email address there. I'll get it, or one of my colleagues will get it, and we'll answer questions. You can always call up. But the real thing is lithium is the wave of the future. We see that because every day there's a new announcement coming out that people are switching to lithium-ion battery technology. And the reality, though, is that in the short to medium term, there are serious supply issues, and we hope to make a lot of money off that.
Sounds good. Well, Tim McCutcheon, I appreciate you for sitting down with me at Rethinking the Dollar, as well as educating our viewers on lithium. I've learned a lot, definitely. So I actually scanned through your presentation on your website at wealthminerals.com, and I also attached the link to that, as well as some documentation as well. For those that are interested in finding out more information, just click below this video and get updated. So, Tim McCutcheon, thank you once again for sitting down. Any last thoughts you want to leave us with?
No, all I can say is, you talk about rethinking the dollar. Just whatever you do, just again, think about the implications of your thoughts. Like, you got to think through a little bit, right? Because there's a lot of rhetoric out there. There's a lot of this, that, and the other thing. And if you're sitting in your basement with a bunch of canned food, you got to ask yourself, how is this going to help me out, right? And you got to kind of balance all of that out.
Right. Fair enough. Well, thank you once again. Enjoy the rest of your day, and look forward to continue to follow what you guys got going on there and further educate myself on lithium. So thank you for sharing that information with me. Thanks.
Thanks. Cheers.